Good afternoon, it's Pat Walker, Mission Winners, doing a video overview of the ETFs. Leading stocks produce leading groups produce leading stocks. By looking at the ETFs, and we do this very quickly, every day I do this. So let's go through them and see. This is BBH, biotechnology. This is sorted alphabetically, by the way, okay, not by group rank or anything. But you can see it rallied up to the 200-day. Look at the volume on this bar. Look at the selling volume right there. Rallied up to the 200-day, bounced down off the 200-day on a pickup in volume. That's a warning sign. That's something to remember, okay? We haven't been involved with it. There you go. Biotechnology. Cloud computing started to lift up. Sold off a little bit here, but the close wasn't that bad. But you can see it's dropping. And what's it indicative of? The market. The M in Mission Winners. Market comes first. We always heed it. Pressure in cloud computing. What does it tell you? Be careful in that section. Next one. Electric autonomous vehicles. Fell, rallied, fell, heavy selling volume here. Rallied on decreasing volume here. Falls again. Below the 200-day. It's telling you, be careful. That's simple. Dow Jones Internet. Lagging. And it has been lagging. It's well below the falling 200-day. What has this been telling us? Be careful with internet stocks. That's all. IBD 50 was basing and started to lift off on Thursday, but note the lack of volume. There wasn't a lot of power. And then it drops on a pickup volume on Friday, below the falling 200-day. This is a good proxy for leadership in the market. And at this time, there just isn't a lot, which is also why at Mission Winners, we haven't been buying a lot of stocks for a while. We've been managing them, taking profits off, and being conservative in our actions. We let the market tell us what to do. We don't have to forecast. Nobody has to forecast. There's tremendous information in the charts if you know how to read it. And we do. We're thankful for that. Gold miners. What has this been telling us for a long time? Stay away from gold miners. Done. It's that simple. Don't overthink it. You don't have to. The trend is down. This is a great tactic I learned years ago. Take a picture of this chart. Tape it on the wall. Walk over to the other side of the room. I think I learned this. Bill O'Neill talked about this. Tape it to the wall. Walk to the other side of the room and look at it. There's your trend. It's that simple. It's down. Be careful with gold miners. Gold. Slipping down here again. Be careful with gold. Biotechnology. Another biotechnology ETF. Rallied up to the 200-day. Starts to fall off of it. What has it been telling you? It's been lagging for a while. Look at this chart. What's this telling you? I think I should have stayed away from biotechnology for a long time. And we have. The chart was telling us to. No forecasting. We don't need to. Just get in line with what is. Online retail lagging. There's not a lot of power there. Be cautious. Oil and gas. This actually reversed a little bit here on Thursday on a pickup in volume. But energy related, has been acting okay. Remember that. You'll see why. Technology rallied up and is starting to fall again. Be cautious with that. Dow Jones Medicine rallied up, falling. Be cautious with that. Midcap. Midcap was demonstrating some power here. It pushed over the 200-day. Fell back below it on a pickup in volume. Fell on a pickup in volume. Look at this. Rallies up to the 200-day and falls down and closes near the lows on a pickup in volume. There's some overhead supply there. Be careful with the midcaps. Home construction. Started to lift up, rallies approaching the falling 200-day, and it falls off of it. By the way, I have to share this with you. This is a great quote. I never met a wealthy pessimist. We are optimists. We are always looking for opportunity, and the markets tell us where to go. It's that simple. We don't have to forecast. We go for strength. Strength begets strength. Focus on strength. Focus on finding strength. S&P 500 growth. Rallied up to the 200-day, starting to fall. Not a lot of strength there. There was, but it's lost a little bit of the strength. Be cautious with that. Small cap had some strength. Now it's starting to lose a little bit. Fell on fairly heavy volume here. Be careful with that. We need to see some power, folks. Airlines, they're not flying. I had to do that. A little bit of dad humor. Regional banks, okay, they debited our accounts. Okay, I'll stop. Anyway, you can see it's right. This is the time my kids would just shake their heads, even though, you know, one of my kids is a dad too. How about that? So I got grandkids. Anyway, falling, be careful with regional banks. Mid-cap rallies up, starting to fall again. lost the 200-day. Be careful with mid-cap. Oil services, energy related. We're showing some life here, right? Fell a little bit. Trend is still up. Okay, now there's something to look at. So now we've seen two different energy ETFs that don't look that bad. Connect the dots. There's oil. Started a lift, not as strong as the others, okay? But it did demonstrate some life in relation. Remember what this chart looks like here, okay? In fact, this is oil. You see this? Here's SPY. SPY, look at that drop, falling below the 200-day, right? Dropping below the falling 200-day. Go back to oil. Not as bad. There you go. What has it told us? To be involved in some energy, and we have been. Got a little weak here, just be cautious. Online retail, not so good here, folks. Okay, started a lift, it's falling again, be cautious. Infrastructure, had a good lift here, just down to the 200-day. Possibly something to look at. So you can say, Pat, then what do I do with this knowledge? You can punch up PAVE and see what their top 10 holdings are and see if there's anything good in it. That's how we connect the dots at Mission Winners. That simple. It's not rocket science. On the other side of the cone, pharmaceuticals. Yeah, they need an infusion, don't they? A drug infusion. This is a blood infusion. There's nothing good here. Stay away from the pharmaceutical stocks. There we go. And I have to take, it's been telling you to stay away from it for a while. Look at the chart. There you go. I love that. And you know what's the beautiful part? I'm doing this video and talking. I can run through without talking. If I just was looking at these, I can go through this list of ETFs. And I do this with the Mission Winners team. God, it takes literally, it takes like 1.5 minutes to 2 minutes, and you've got a great feel of what areas to look at and areas to avoid. Isn't that what you want? Use our time wisely, which I like. NASDAQ 100, this had a higher low setup that we were involved with. This was very nice. Now it's dropping. We're out of it. Fell on an increase in volume. Be cautious with NASDAQ 100 stocks. You can see there's broad-based selling in a lot of areas. QQQ, same situation. This is the non-leveraged one. Rallied up, falling. Be careful there. Retail rallied up to the 200-day and fell. Of all the ETFs we showed you, this one doesn't look that bad, but it sure doesn't look that good either. You're not going to see this chart in any book right here saying this is what you look for to buy. I mean, it fell on heavy volume here, fell on heavier volume here, fell up on a pickup in volume there. Here you go. It's below the 200-day, falling 200-day. Be careful with retailing. That's simple. Cloud computing was acting decent. Now it's starting to lose it again. Be cautious with cloud computing. Silver, that's lost its sheen. Okay, sorry. There hasn't been any power in silver for a long time. If you'd been looking at this stock way back here in mid-April, you would have said, I'm going to stay away from the silver stocks. That really helps us. Good investing is not only areas, knowing these are the areas to look at. Good investing is also, these are the areas I need to avoid. Remember that. That will help you. Okay? Steel rallied up to the 200-day and backed off a little bit. Doesn't look as bad as a lot of the others, but it needs to push through the 200-day on really heavy volume. And you need a good market too. Semiconductors were acting okay, getting a little choppy here. Fell on fairly heavy volume here. Fell on a pickup in volume here. Just be cautious with the semiconductors. Spiders. Look at the selling on Friday. That was serious volume there, folks. That was serious selling. Bounced up, rallied up to the falling 200-day and fell off of it. Another reason why Mission Winners, we've been cautious. We don't forecast, we let the market tell us what to do. SSO, similar situation. We had a higher low setup and this worked really well, and then we sold it. We're out, okay? Last year's gone. Never gonna have any problems, folks. No, I shouldn't say that. That's like saying we'll never have any losses. That's not true. Yes, we have losses. Anybody who says they never have losses is either never invested or they're lying. Yes, you have losses, but clean and simple base entries gives us clean and simple base exits for a much smaller loss. We control risk. It's a big thing with us. It's good for the head and good for the pocketbook. Solar's acting okay, all right? Got a little ragged right here, but now look at this. I just showed you a bunch of ETFs that don't look so good. Solar doesn't look that bad, does it? There we go. Small caps, yeah, lagging again. Look at the selling volume on Friday. Serious selling volume. Got to be careful with the small caps. Uranium showed some life and then it's backing off again, but not as bad as a lot of the other ETFs and indices. Uranium, something to remember. Oil, not that bad, hanging in there. Okay, fell but on less volume. Energy related. All right, something to consider, something to remember. Aerospace and defense is lagging. Be careful with aerospace and defense. Biotechnology rallied up to the 200-day. It's falling again on a pickup in volume. Be cautious with biotechnology. Home builders, it's not doing so good. Not so good. What does this tell me? Stay away from the home builders. It's that simple. Don't overthink it. Strength begets strength. Good to remember. It will help you. Materials, how do you build things? How do you build houses? Materials. It's living below the falling 200-day. Needs to show more power. Be cautious with it. Energy. Remember we looked at a couple of oil stocks, oil ETFs? There's energy hanging in there. Okay? Now, I'm not saying buy it, but I am saying energy isn't acting that bad. An area to possibly look into. That's what we do. Financials, there's nothing too good there, okay? Industrials was acting okay, but got hit a little bit on Friday on a pickup in volume. Industrial stocks, it's not the best. Be cautious. Technology, we were heavily involved in technology. See that higher low setup? This low was higher than this low. This low was higher than this low. This one happened when I was up in the mountains in Colorado. And there was some MAXLIST stocks, and I'm going to make a MAXLIST video. And I will point out the higher low setups. This led to a great gain in some of the MAXLIST stocks for us. And you'll see that in the next video. But right now, looking at it, got hit pretty hard there on Friday. Be cautious with technology. Just should have. Consumer staples started to lift and fell back. Just not a lot of power right here. Be cautious with that. Utilities, kind of hanging in there. It's more of a defensive sector. A little slower and ponderous. Just kind of watch it. And with what they are doing with interest rates, remember, this is interest rate sensitive, the utilities. All right, just be aware of that. Healthcare, they need a shot here, don't they? There's nothing good with this at this point in time. Living below the 200-day, fell on a pickup in volume. What does that tell us? Be cautious with healthcare stocks. We're about down. Consumer discretionary started to rally up, goes to the falling 200-day, and it falls. Be careful with consumer stocks. There we go. Metals and mining, kind of hanging in. This looks better than a lot of them, okay? XME, take a look and see what they own. That's systemization. That helps us. Overall, though, team, be cautious. Now, here's another energy ETF. Have we been involved with energy stocks? Yes, we were, and steel stocks. But look here, not a lot of good stuff here, okay? On that bar. But now look at the trend. How's the trend? The trend is pretty good. You look at the bigger picture. And there's a reason I said what I said. Don't get hung up on one day. Look at the bigger picture move, the trend. Right here, don't get hung up on one day, but then when it starts doing this, it's like, you better get out. Starting to lift. Energy related. How many times have I talked about energy doesn't look that bad? There you go. Continue onward. Retail, they're not buying it, okay? Software, lagging, be careful with software. Let's look at the MAXLIST. Again, I love these stocks. Here we go. Apple rallied up and reversed down on a pickup in volume. Now, this is what I want to show you, though. This is why we look at charts every day. Do you see this low? This low was higher than this low. This is a higher low setup. I even have it labeled. This was on the key list. VIPs bought this here. See the volume pickup? Higher low setup, and it starts to lift. Then it pulls back on less volume, and then it starts to pick up again. See this bar right here? Bouncing off the 50-day, the green line, and the rising 21-day exponential, which is the blue line. More bought. That is a trend. That's good money. That's real good money with not much hassle. You see this yellow line? That is the 8-period exponential moving average. There's a tremendous amount of research on that moving average. I did it with a trading partner of mine who's a brother from another mother. There's 2 years of research in this back in the late 1990s, early 2000. There we go. Who had a profound impact on us with that? Ed Sakota with the 5-period moving average. And he really challenged me when I met him. Anyway, there we go. Let's move onward. What is this telling us now? Be cautious with Apple. That's simple. Amazon. rallies up to the 200-day and backs off of it. Falls on a pickup in volume. Be cautious. You see this low here? This low? This is a higher low, right? It's simple. It starts to pick up. Look at the volume on that bar right there. Pushing through the 50-day. Yeah, buy. Runs up, pulls back, starts to, and settles here. Entry was good. Sold a little bit up in here as it was rising on decreasing volume. And then you get the payoff. Why was some sold too? Because earnings were coming. But look at that run. Hey, folks, buy right here, okay? I'll say you buy it for 114, okay? 114 all the way up to near 140. That's good money. You didn't sell at the top, but you made good money. There's the higher low setup. It's something to remember. It's a trading, investing approach that I've used for years. And it works. Alibaba, this is just pretty loose here. I'd be cautious with this, okay? When you start getting whippy action like this, just watch it. Let it settle down. I'd be very cautious with things like this. BIDU started to lift up here a little bit, okay? Bounce. Now, I just showed you two of them. What's the common theme between this stock and this stock? Chinese related. There you go. Potential opportunity eventually. Something to consider. Not right now, but eventually. Google. Lifted here, but it's pretty choppy here, folks. Okay, not a lot of good things. And you see where it's falling? Fell below the 50-day. Look at the selling volume. What does that tell you? Be careful with Google. We're not in it. We haven't been in it. Watch that. Watch out for that. Be cautious. This is the old Facebook. Goes across here, then it starts to fall again. There's no real power here. I just showed you. I want you to look at this low right here versus this low. This is a lower low. You see it? Now watch this. We'll do Amazon. Higher low. This low, higher than this low. You see this? Now I'm going to go back to Meta. Lower low. That's why we weren't involved with it. Slight higher low here, okay, but it's really been underperforming. You got to be cautious with it. This one's been lagging for a long time. Continue onwards. Microsoft. Higher low. Right here. See that base right there? You see the volume rate on this bar? I always tell the VIPs, I say this to everybody. People talk with their mouths and vote with their pocketbooks. They voted on that bar. Look at that igniting bar. Look at the volume. Yeah, and it was bought. And that was a nice run. That was a really good run. Sells into strength, starts to drop. You sell the rust off and lock your profits in. Netflix, just not too much good here, folks. All right, really lagging. We haven't been involved with this. Gosh, I don't think we've been involved with this year. It hasn't been that good. NVIDIA, higher low. This low, higher than this low. This was on the key list. Buys here and here. Runs up. Everything's great. Pulls back on less volume. Starts to pick up again on a pickup in volume. Bouncing off the 50-day. There you go. Runs up to resistance. Sells some. Starts to fall on heavy volume. Take the rest off. That's nice money with no hassle. No real hassle. No high anxiety. There's a valuable lesson there. I hope it helps you. Yes, this was on the key list back then for the higher low setup. Tesla, what do you see? Oh, I wish we could talk to each other right here. There's a higher low setup right here on NVIDIA, right? Tesla. Do you see any higher lows on this? Yeah, I see one here. Okay, started to lift. That could have been a short-term trade if you want. Then it falls again, and another higher low. On this one, it starts to power through, and look at the continuous power in volume. And that was a buy, and that was a good move. That was a higher low buy. Rallies up, starts to fall. See this bar here? You're selling some. That's it. Now, it's just basing at this point in time. It doesn't look that bad. It actually looks a lot better than a lot of other charts, okay? What's the one slight negative? It fell on really heavy volume on Friday. Be cautious with that. You see these tops right here? I'll draw this for you to help you. Maybe it'll take that out. Fell on really heavy volume on Friday. Be careful with that. It also split 3 for 1. So just things to look at. Things to look at, things to manage. Anyway, wanted to point that out. And the last one's Twitter. Twitter, there's nothing really great. There's news moving around with it, okay? You got to wait and see how that news plays out. If it goes through, maybe it'll lift. If it doesn't go through, maybe it'll drop. Big opportunities, big money is made when these things trigger.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.